Hi friends, welcome back for another episode of Technical Analysis with me, your friend, Rocky Outcrop. And look at that. Look at that sky. Red sky at night, shepherd's delight. Red sky in the morning, shepherd's warning. But is it evening or night? Is it evening or morning? Well, let's take a look at the charts and find out.
Hello, and we're back in the charts. This is Bitcoin versus US dollar 24-hour Bitstamp chart I've got behind me here, and you can see that the current price over here, just above my head, is 9,902, and the lows since midnight have been 9,850 and the highs 10,051. But I think it's probably worth looking back a little bit further than midnight to see what the real lows have been over the last 24 hours, and that's 9,727. So yesterday's video came out, and we were looking at this line up here and this line down here as being the potential for a big range. My hope and my opinion at the time was that we'd probably stick in this area. So obviously, you're best to never trade your opinion, as I often say, and you trade the technicals. And of course, I've been saying for many days now that the higher low could be set in and around this area, and I've had that line in. So we've had sort of forewarning on that front, and that's been good at 9,850 or so. And that's actually where the lowest has been today, is sort of exactly where that line is. But in the last 24 hours, of course, we've been a bit lower than that. And if you've been watching along with this series, then you know that I'm giving away a funded derivative account, and that to enter it, all you need to do is leave a comment and tell me the name of the movie in that particular episode that I'm making reference to. So I'll make reference at some point in this episode to a movie, but I just thought I'd throw out the answer to yesterday's one, and it was Casablanca. So if you want to go back to yesterday's video and enter a comment and make sure you say the word Casablanca in it, you'll be entered into the giveaway. And indeed, if you go back to the video before that and put Jerry Maguire as your answer, then you will be entered in an extra time. So there's 2 free entries for the competition for you if you want to take part. And of course, then this one here, well, we'll get that quote eventually at some point. I'm sure I'll mention something pretty obvious. Just let me think of something as we go through the charts. But right just now, what we're looking at here is that we've come down and we've tested off of this and potentially set in a higher low. Now, I know that the Fomo is real. The Fomo is strong with this one. The force is strong with this one. How about that? There's your movie quote for you. All right, look it up. All right. So anyway, the Fomo is strong with this one. And no doubt there's a heck of a lot of Fomo technical analysts out there at the minute on YouTube saying all sorts of stuff. Now, of course, it's worth bearing in mind the sort of the fear is real. So what would happen if the prices went down? Well, the next port of call, of course, you've got the 21 here on the daily chart, and potentially different moving averages. Like, let's just change it to the Peter Brandt one for the crack for now. He uses 18. Oh, dang, it hit right off the 18. So Peter Brandt was a winner yesterday. I'm going to stick it back to 21. Actually, no, stick it to 20 so you can see what it would be if it was a Bollinger Band. Oh, pretty close, but not quite. Anyway, I use 21 because it's kind of, well, it's better for me for a bunch of reasons, mostly due to the fact that that's what I've been using for quite a while. So this is what we're looking at now, and the question really becomes: is it evening or is it morning? As I said in my intro, is it red sky at night, shepherd's delight, or is it red sky in the morning, shepherd's warning? And I think that's actually pretty good for this. So as it happens, I filmed that during an evening, and it wasn't actually this morning that I filmed that. So I just had that sort of in my back pocket, ready to go, and we can see that, in my opinion, currently that is red sky at night, shepherd's delight. For everybody who's delighted out there to have managed to actually add to any longs or to take profit on shorts from this area down the way, then congrats to you guys. Of course, I'm not a financial advisor. I'm just a spirit guide. Any decisions that you make are you making them. So very, very good to you if you've done any good work over the last week. Well, keep an eye out here as well over the next day or so for whether or not these 2 dotted lines cross. You can see here that's the 50 and the 200. And if those 2 cross, then that's the golden cross. And I've been pointing out as well to people that when this happens, it doesn't always lead to. I'll just move back. It doesn't always lead to a rise in the price action. Oh, I just deleted it. So give me a second here. Just put it lock. There's a wee there. I've locked it. Right. So it doesn't always lead to an instant rise in the price action. Let's just have a wee quick look over here. You can see from this when the cross happened at this time here back in April 2019, there was actually a more than 10% drop down in the price. And of course, if we had a drawdown of 10%, say the price was around 10,000 at the time, or 9,000 as it is now, or 9,900 as it is now. Sorry, then you're looking at more or less $1,000 drop down in price, which would be a heck of a big move there. You'd be looking at coming down to around about this area, and you could even fill that gap on the CMEs. Now, talking about gaps on the CMEs, let's have a quick look. We were celebrating the fact that we've managed to close above the 50% retrace mark here on the CME chart on the daily, and if we go over to the weekly, you can see that while we didn't open above it, we managed to close above it. So same sort of thing there, but we opened and closed on the daily there as well, and that's been good, and that's what we want to see happen. Of course, it doesn't actually have its own higher low set in quite yet, so of course the CME's prices could come down themselves, open up say around about these areas here, and that could possibly constitute a higher low. It would also create a gap. If the CME's open up tonight below 10,100 or so, then you'd be looking at a gap on the chart, and that would be a gap above us, and gaps do tend to get filled, so that would potentially add some upward price pressure. But just the counter argument to that, of course, is that we have this gap down here below around 8,500, where that also mean there's a sort of 95% chance that a gap will get filled at some point in the future. So you never know, it might not be filled until we all pop our clogs. But then on the other hand, there's these things to be aware of on the charts. And of course, we always say as well in our videos that price action is not predictive, that none of this is predictive. We can't actually tell the future. It just looks like that sometimes because we're managing our risk. And what we do is we manage our risk. And sort of because we know how things have been going over the last wee while, we're able to talk about it in a way that to the uninitiated sounds like we're predicting the future. And that would be great. I'd loved it to be seen like we're predicting the future by saying this is a higher low here, but actually we're just talking about it from a risk management point of view, and saying, well, that's what this could potentially be. It's a really good idea. For example, then if you were shorting it from here, to have taken profits in this area, and then of course if you were to want to short it again, you'd be looking for it to break down below the 21 here. And if you were also managing your risk in terms of longs, then, well, if you've got in along with a decent entry price in the past couple of weeks, then of course that's where you'd be looking to sort of take your profit before it and consider how things are going, but or to indeed stop out if that's what you were thinking about doing. But would I be particularly nervous about it at 9,500? Not necessarily, but of course we did have that mention of the gap, which could potentially show up, and then that would take the price action all the way down to roughly where this 200 exponential moving averages, and it probably undo temporarily if it were to happen in the next day or two any sort of cross that you have on these two moving averages. So anyway, as it happens though, if you look back sort of 21 days or so, not 21 days, 50 days or so, then you can see back to where what sort of candles are being taken off here in terms of the moving average, simple moving average, and replaced with one from here at the front end of that average calculation. And I suppose we could just kind of do that real quick, possibly, although I'm nervous about losing up too much time on this sort of a thing. So if we go back 50 bars here, you can see that then the next candle comes on, no matter what really, as long as the price is above 7,000, whatever, 500, whatever it is, 7,000 there, 7,000, can't really see it, going to guess 7,500 or so, then of course you're taking off one from the calculation for what the moving average is here, and you're adding on from one up here. So that's probably going to drag that on up regardless of where the price action really goes. The price would have to drop back down here and really operate below this moving average in order to stop it from having an upward incline over the next wee while. So in terms of the longer term perspective, things are very much still in the bullish scenario currently, and are gearing up towards having confirmation of a longer term bullish trend, and that's really what we want to see. But we don't. But of course, there is always the worry that there's FOMO in the air, and of course, like I said, the FOMO is strong with this one. So just to be aware, that's really what we're looking at, and that's more or less Bitcoin summed up for the day, including the potential of a CME gap. Now, of course, if you were to be crazy and you wanted to mention it, then if you'd have a gap, if somehow Bitcoin prices went up by 11 p.m. Universal Time, that's GMT, then you'd have to like 10,650 or so, you'd have a gap to the top side, but I don't anticipate that happening at all. Anyway, right, let's move over to the Ethereum and see how it went. Well, it went up, broke above, but then didn't actually manage to open and close on a daily above the 618, and it's come back down for a retrace. In fact, giving up good opportunities for people, indeed, in terms of this higher low sort of concept from Bitcoin. It applies over here too, in terms of adding to longs. I think I said something like 265, where the price currently is in the videos yesterday and whatnot. But of course, there was even better than that in terms of those things that went down to 257. And of course, if you were shorting above this area, knowing that it's a profit-taking zone and that it's quite likely to retest the 618 at the very least, then you got added on an extra $10 on the movement downwards on your price. That's an extra few percent there. So that's good for you if that's what you've been doing. So the next, again, we're back in the same boat. You know, really, we're looking to see whether or not we can get above and back into the 270s area. And you can see that today so far we've been up there at 274. We've been since midnight as well. We've been down at 257. So there's a fairly big range on Ethereum at the moment if you're traded in there. And in terms of opening and closing and whatnot, and moving on this upward and onward movement, I'm looking for the prices to open and close on the daily above 275 or 270 at least. Now we've already done 270. That's where the 618 is exactly here. Technically, we opened and closed above it. If depending on exactly where you pinpointed you're drawing in, you might want to refute me or whatever, rebut me about me having said that earlier on. But you know, that was as part of this moment when we broke up above. See ya. That's just me saying bye. Not to you guys though. I'm still got a couple of minutes to go. Just a couple of minutes. The music will kick in a second here, though, and you'll see him tuning out. The video today can be a short one as well. So just the Sunday supplement. Thanks very much for tuning in, by the way. Remember to like, comment, and subscribe. Thank you so much for joining me for this video. I mean, of course, you could be doing anything, but you're here watching this with me, and that's fantastic. I really appreciate it. Now, the story really is more or less the same across the board. We've in terms of our targets and where we are, there's the bearish sort of consideration as I film right now live, that when you look at Ethereum being just below the 618 and you look at Litecoin being in and around this area of 77, just below 77 at the minute, then just above 77 at the minute, but just below 77.52 where our blue line is just, then you're looking at how we're sort of coming up against this and asking the question of whether or not that is going to be resistance or support. It's not, you couldn't say just yet looking at the daily chart that that's the case. Now, of course, I can go down to lower time frames and you might think that might give you some more clarity, but we open and close above these things. We're just trying to figure that out just now still as we go onwards. In terms of like divergences or whatever, we had them in the past, and this could be then playing out as part of this lower high, and that's across the board as well, by the way, on all these assets. So it's all just sort of potentially just played out. So I would take a FOMO analysis with a grain of salt. Let's move on to one versus Bitcoin, and we can see that one versus Bitcoin is again just doing the same sort of thing as with us, a higher low potentially here at this point. But higher obviously than this low over here is what you'd be looking at in terms of the cycles in the market. So really what we're looking at the minute, again, to risk repeating myself, of course, is about whether or not we can actually continue to make it to continue this upward trend, or if we're going to break below, and that's sort of where as well I'll be managing risk around this asset, so as whether or not we're making a lower low, there for that. So and you can look at it against BNB where there's a lot of liquidity. I like to look at that, of course, and you can see that not only did we come up during today, crazily enough, and hit off of this upper end area close enough to the blue line, but of course you've got the 10 simple and the 55 moving average in there as well, and we came up there, it's tapped off that and back down to where we are currently. That's a range of 4 of these, which I guess is quite a significant percent given that there's only 25 there as the price currently. So that's a fairly big percentage range movement on that coin, that asset today. Is it hard to tell? Well, I mean, we're in a decision of flux. We're comparing it against two potentially volatile assets. One BNB is a relatively new parent as well. It's not that that great for right now, and when you're looking essentially at chop and indecision during what you would normally expect after a period of volatility whilst you're sitting in a low. Let's look at XRP. XRP's managing it's obviously hacked my charts and is looking at them, and is just using that for its entire movements currently. It's more clear than the others in terms of it's certainly in this uptrend here. It's not got any divergence across these things. It has in the stochastics potentially on this, not potentially. That's that there. If this is the low, then you could say in the local low that there was bearish divergence between these last 2 points here. But there's not on the other oscillators. And in terms of the upward movement, there isn't any hidden bullish divergence there either to be looking at. Just generally speaking, it's hard to tell always with assets like XRP that are completely notorious for being very pumpy dumpy. But like this is our range here, and that's what we're looking at. So that's what was already identified, and essentially we're trying to play the same story as we have done with the other ones across the board. We're not going to look at that chart; that's just there for the funnies. But that's the USD one on BitMEX where our shenanigans go down. But you can see again here that really we're just looking across. We've this area which has got a lot of wicks and bodies in it. It's hard to say exactly where you would draw your horizontal. There's going to be a degree of subjectiveness there, and we could stick on the VPVR and just see. But you'll see probably that we've come down to an area where there has where the trading activity ticks off again. We're just going through areas where there's less trading activity historically. You can see it there already, can't you? So just make that smaller so you can see. So essentially, woof, back down here, and that's where we've been supported by that. And that's not that much of a surprise, really, in terms of the trading. I think so. It was a predictable enough higher low there on that front. I think that we should remove any sort of sense of FOMO there and everything else until we've broken down below this area here of trading, and then going down past these areas. The lower low in terms of XRP versus dollar here is actually another chunk on down from there. So it's actually healthier looking in that sense than some of the others. Link manages to buck the trend. Really well done, Link. Hats off to you. While everything else is done badly, it's done well. Does that make us a little bit worried in terms of if everything else does well, let's start doing badly? I don't know, to be honest with you. You've got to sometimes just hold your hat up and say, look, if Bitcoin were to start rising up, I think it would probably carry the whole market with it, and Link as part of that would also continue to benefit. So it might just be a case of when the strong get strong, the stronger get even stronger, and that's what you know from trading really across traditional markets. So they always go with the strength, and the force is strong in this one here. But with this one, that's what we're looking at here. We've come down to this particular Fibonacci retracement where we thought that we probably could again, and then we've come on up from there to 467 at the minute. So it's a strong asset. I'm happy to see that performing well in the face of a fairly negative market. I wouldn't anticipate necessarily having a big drawback on that versus the Bitcoin price necessarily if the Bitcoin price were to shoot up, although it could go sideways slightly while going up against the dollar. Excuse me, pardon me very much. I'm sorry about that. And then Tezos here, it's the same thing, and it's the same story that we've had for a while. If you've been watching any of the previous videos, then you know that I've drawn in this what I've been calling a BS Fibonacci retracement. We're not actually using it as for the retracement down the way until such times as it were to break below this level here. It remains essentially an invalid Fibonacci retracement. But what does that mean? Well, the inverse of that is also equally true, that as long as it remains above here, you can anticipate the targets to the upside being actually what the next stage would be, which indeed would be up here at the $3.80 sort of $4 mark. So that's what we're sort of looking towards, and you get a couple of scares, of course, across the time. Of course you do, because that's trading for you, isn't it? And that's why people have this thing called FOMO. And here we are. Well, we've just managed to stay in around this area. So if you're enjoying this particular technical analysis, especially since it's very much a different way of looking at the market there, then let me know. It's definitely not textbook, and I don't recommend that you do that at home. Okay, and that wraps us up for the entire market for today. If you see, you've noticed here that we've broken below this trend on the RSI, I suppose, on Tezos and on the stochastics. So, word of warning there, I suppose. And if there was a downside target and to continue in the uptrend, and for this Fibonacci, which is BS by the way, to just be removed and ignored, it would be 2.9. So if I was not in a position right now and wanting to manage my risk at an area, or was in a position or shorting or whatever, and for some reason wasn't willing to operate around this level and cut and run with any changes, then it would be, of course, this level that I'm looking at, which is 2.9 there. there, but it's probably actually going to be okay. We've got a number of hours left until the CMEs open up. What have we got on the day? If we just go back over to CME chart, use the 24-hour chart, you can see, or to this chart here, you can see that I have left on the day, where's my countdown timer, 10 hours and 5 minutes. That means I've got 11 hours and 5 minutes or so until the CMEs open back up, I think, so I've got that number right. So that's what we're really looking for in terms of our price targets until then. So thanks very much. I mentioned the movie quote earlier on quite a lot of times. It's really obvious one, and I've mentioned as well at the start of the video, I mentioned the 2 previous videos movie quote answers. So if you want to take part in that funded derivative account, then let me know. I'll be checking in with that again tomorrow's video. If you looked at yesterday's one, you'll know that it's gone slightly underwater at the minute, but that's okay. I actually added to it. Let's just see if that was bad decision making or not. I think I've laid out all the reasons for and against that, but essentially in terms of that account, what I'm looking at is trying to risk it for a biscuit for all you guys. So, okay, tune in tomorrow. Thanks very much for joining me today.